I am also the Chief Executive Officer of Infallible Group. Infallible Group is a financial consulting company. And what we do is we offer personalized individual and business financial coaching. At an individual level, we actually engage with you and we extract your financials and help you understand where are you at financially, where do you want to go, and what decisions can you make based on the resources that are coming your way now or coming your way in the future. One of the questions I keep being asked is how am I different, say, maybe from Abojani or Centonomy or the numerous other houses that are there. And I just say my work is I'm a financial shrink. So I will sit with you and we'll extract your numbers in a space that is confidential, in a space that is open, and then we craft a personalized plan for you to be able to now know what you're going to do in the future. Then we go through a couple of sessions, then we have regular checks, either once, twice, or depending on the number of times that we need to do it in a year, just to make sure that you're always on track. And then for business coaching, we do the same thing, just consulting with companies, talking to them through their finances and strategy. And we've been doing a lot of work, especially during COVID, just trying to see how far can companies extend their finances and what decisions do they need to take. So in all of this, we try and create financial frameworks that separate the individual from the decisions that they need to make so that they're more objective in the decisions that they make as opposed to being emotional. And they're also making decisions from a point of knowledge and owning those decisions. So that's just part of my background. But I'll just start by painting a picture of what we already know. I think we're all cognizant of what has happened with COVID, but I like to look at it a bit differently and say, where were we before COVID happened? If you follow maybe the government statistics, as at February, the government had raised 1 trillion shillings in revenue. Yet the government was running on a 3.2 expenditure budget. So already the economy was not necessarily generating as much revenue as the government thought. So the government was running on a deficit. So you have that scenario of a deficit, which means that the government had to still keep coming to the market for debt. Then you have COVID happening. And I paint that picture just to enumerate and say, whereas states like the US, countries like United Kingdom, Russia, etc., countries that actually have money to give to their people, we're not in that space. We're in a space where our government is just trying to be able to pay its wages, pay all these people who are under the government wage bill. We're in a space where the government is trying to pay for its own debt for the year, and the financial year of the government is about to end. It ends in June. So you're in a space where the government would like to do more and it can't do more. So the step that the government has taken is to say, can we engage with the private sector and be able to come up with quote unquote social frameworks that can be able to act as a social net. In other words, some of the proposals that you've seen in the tax amendment bill, for most of us on this call, I'm sure are familiar with the fact that income tax has reduced from 30 to 25%, at least for the majority of the people in this call or in the formal sector. And what the government is saying is we don't have money to give you, but we have the power to be able to change some of the laws so that we can give you a bit of relief. The first and foremost relief has been the pay as you earn, the reduction in that. The second relief has been the central bank coming out and saying we can extend a 3-month waiver. And I think it's important for us just to deliver the point and just say the things the government is saying should be done, but the onus is on you as an individual. So the other way the government is trying to use its power is to talk to banks, to ask them to be flexible if you have existing liabilities with the banks. This, I think, could be an interesting space because you have to be able to go to the bank and convince the bank that I don't have the money. Some of the banks normally have loan insurance, some don't have. The ones that have loan insurance, I want to imagine the process is much easier because they already expect that if you're made redundant, for example, your insurance kicks in. Some of the banks, the indigenous banks in this country, most of them tend not to have any insurance for their personal credit facilities. So it would be a very tall order for you to be able to convince them. But none the same, I mean, it's important for you to just reach out as fast as you possibly can, especially if you see a risk to your income at this point in time. Then the other major thing we've had is on rental income. there has been the back and forth of people wondering, is it a law? Is it a suggestion? So the law currently states that you can be able to go and speak to your landlord if you're having problems paying for your rent. And it depends on what side of the fence you're sitting on. If you are a landlord, more often than not, you probably have obligations, loans that you're paying for using the rentals that are coming in, or perhaps you have retired and this is your core source of income. So it's a very hard conversation, but the fact of the matter is there is a correction in terms of the rents that we are paying and the rents that we are going to see. So if you're a person who's in that space, it's something that you have to be cognizant of and see if you can be able to make adjustments. Then now when we come to look at what does this mean for your personal finances? So when you're looking at your personal finances today, you're really looking at your sources of inflow, your income, where's your income coming from, vis-a-vis where's my income going. For most of us, at least for most of the people that I speak to, you tend to find that we have found a way of specializing in one income. If I'm employed, I want to be the best person, I want to be the best employee. So that's the income that I'm actually pushing. So now that has been my sole income, I'm at the space where the company I'm working for is not generating revenue as fast. And for us in Kenya, we're actually at a space where we haven't seen the full impact of what's happening. I sat in spaces earlier in the week, and the consensus was there will be a lag effect in terms of the financial and economic consequences on the economy. And remember, I've just started by painting a picture of where the government is at, and then now painting a picture of where the government will be after this COVID, just to show you that there will be a bit of riskiness on your revenues. But it really just depends on what sectors you are. We've already seen tourism take a hit, aviation has already taken a hit, restaurants have also taken a hit. I'm in the media, we're also seeing the media industry taking a hit. And if you're anywhere online, you've seen media marks, people just going to sue the employers, trying to defend their salaries, etc. I think there'll also be a slight hit on financial institutions. I think with the removal of CRB, for example, you could see some companies that were generally dependent on revenues from issuing CRB certificates come under a bit of a threat. We're also seeing banks, if you even speak to people who work in banks, I've been speaking to a couple of them, and they're like, now all of a sudden the footfall, the number of people who are coming into the bank is reducing. And they're also very cautious in terms of extending facilities. And also most of them are trying to see how can they also now start to use digital channels. So the same way we're facilitating this call via a digital platform as opposed to having to lease a room and provide snacks and electricity and things like that, most models are moving to a similar model, a digital model. So it's important for you to have that perspective and for you to just begin to ask yourself at a personal level, where's my company at? How is my company doing? I always say it's better for you to anticipate a problem, at least a financial problem, rather than be caught unawares by a financial problem. In other words, if, for example, I earn 100,000 shillings, it's better for me to pay attention to what's happening to the company, so that the moment my salary comes down to, say, 80,000, I'm not just sitting there, twiddling thumbs, hoping that it will go back to 100. When it gets to 80, I'm quickly thinking, what can I do to ramp up this revenue? And maybe that's something that I will explore later in this conversation. Now, if you move to the other part of this equation, it's your outflows, really your expenses. Where's your money going? What have you been spending on? What can you be able to spend less on? So there are very many ways of looking at expenses. And I always say, in finance as in life, there are many ways to skin a cat. I think what's important is for you to decide what works for you, to be able to be aware of what is best practice and to be able just to make adjustments to see what works for you. It's the same way with many people like to take tea. You'll find one person likes stronger tea, less milk. Somebody else probably likes tea with no water at all, just milk. Somebody else likes black tea. We're all taking tea, but everybody now over time gets to find what works for them and they're able to adjust to that. So when it comes to expenses today in the time of COVID, it's really just saying, what must I pay for? What can I not pay for, right? So fixed cost vis-a-vis your variable cost. Some of the fixed cost, rent, if you're the person responsible for paying for rent, If you have debt obligations, if you have an outstanding loan, whether it's a mortgage, whether it's a personal loan, whether it's a car loan, whether it's a loan to a bank, whether it's a loan to a Sacco, or to another financial institution, that's an outstanding facility. If you're paying education school fees, I've seen people complaining and saying, our children are not going to school, why are we paying this? So it's still a standing charge. Otherwise, you'll find that when COVID ends, your child does not have a space in the school that they were in. Then you also have dependents. They're people who support either their siblings or their parents, or they have a social network of people that depend on them on a regular basis for upkeep. So those are some of the expenses that, whether you're earning or not, they're already sort of cast in stone. You already have that responsibility, and it's sort of a burden that you must be able to weather through at this point in time. Then the variable ones, going out, eating out, investments actually is a variable cost at this point in time if it was a line item, because you don't want to be putting money aside and you don't know exactly what you're going to do. I will touch on that after I'm done touching on the operating cost. I think the considerations now is just to say, to be as realistic as you possibly can be. If you have a budget, good for you. If you don't have a budget, it's a good time to just sit down and say, this is where my money is coming from. This is where it's going out from. And why this is important is on two fronts. First and foremost, if you have responsibilities, if there are people you support, if there's rent, if there are all these obligations that you have, it's better for you to start having that conversation and alerting these people that the way my revenues are going, I might have a bit of a problem. And I want to see if we can start the conversation early in case I'm unable to, for example, right? If you're not in that space, then good for you. But I think we're at the space where COVID has shown us, I was reading about the Spanish flu. We are not at the Spanish flu level, but it's opened my mind to today you could be middle class, and the way they say middle class is one check away from poverty. Tomorrow you could be in a random place. So it's important for you to just pay attention. And I find if the faster you start having that conversation, if you have a bank manager or just speaking to people to see what can I do, so that in case of anything, if anything happens, you're not caught flat-footed and people are wondering, why didn't you give us a heads up? If you are in a family and there are people you support, you can just start saying, I can still keep supporting you, but I just want to let you know that, I'm having a bit of a hard time with my own revenue. So I can do this. I don't know how long I'll be able to do it, but I'll keep you posted so that people around you can know what's going on. Like some of the conversations I've been having with some of the people who offer daily services to me, like, Mama Fua, it's to say we can keep doing this, but at some point, because of limitation of movements, how do we coordinate so that I'm still supporting you because I know you need it, but I'm also not putting you at a point of risk, But it's better than waking up and telling the person, don't come, and the person had planned for the revenue. I think that would be extremely unfair. And we'd also hope if you're employed that your employer is engaging with you. If they're not, that's really out of my purview. I'm not a HR person, but I'd say there are some legal rights that you have as an employee that need to be followed for you to be able to ensure that you're being treated fairly at your workplace. Your expenses, other people say have 6 months worth of your expenses, which is a good thing. If you don't have it, I'd say start now. If you've gotten that 5%, decide I'm putting it away. If you're looking at your expenses, just note them down and say, what can I do without? If I have to make tough decisions, what can I do? But I think the point of encouragement is the whole world is going through this. It's going to end. At least we have seen the actual health part of the disease comes to an end. We've seen what's happening in China. We've seen what's happening in Wuhan. But what will linger on is the economic and the financial impact on our lives. And I think this moment of crisis is a space where you sit down and say, okay, there are things I should have been doing, I've not been doing them. This is how I'm going to start. And I think one point of starting is just to reevaluate your budget and to be able to put it down and say, this is where I'm at. To also reevaluate your personal net worth. What are my assets? What are my liabilities? Where am I standing at? What can I do? So that you're holding on to cash. So then you can be able to create your emergency fund. And then another key question that I've had, and I've also, Robert has also shared in this group, is then where do I invest? I think with the crisis, there will be opportunities to invest. In theory, assets are supposed to come off. We expect stock prices to come down. We expect house prices to come down. That's in theory. For some odd reason, I look at the Nairobi Securities Exchange, prices have not come off as we had expected. We were looking at a 30% correction. I still think that these prices will have to come off at one point or another. Because if you really look at what's happening on the Nairobi Securities Exchange, Safaricom, yes, is reporting numbers, but if you analyze the numbers, the revenue grew at 4.5%, yet the profit after tax grew by 14.5%. Yes, this is the largest company and they have magnanimous numbers, but they're not growing their revenues. They're actually growing their profits by managing their costs. So if Safaricom is being forced to manage its own cost base, in Swahili, Mbithe, and you don't have that luxury of generating 251 billion, but maybe the people on the call do. I'm not yet there. So when I see the big boys, what they're doing, I also just try and adjust and see what I can do. But apart from Safaricom, the banks will struggle. All the other sectors will struggle. EABL, when restaurants close, EABL sells beer through the bars. So you can imagine, in as much as the price came down to 139, the question is, what are you buying? Are you buying a company that's worth 100 shillings? Are you buying a company that's worth less? So when I say that the prices will come down, right now it's the foreigners who are selling out of the market. They're the ones who hold up the market. Right now, it's the local funds that are buying into stocks on the Nairobi Securities Exchange. When they're done, what happens? These local fund managers get their inflows from you and I, So when we put our pension money aside, that's the money that they use to invest. If people will lose jobs, then what will happen? What I'm trying to say is that the demand for assets will come off. And even these assets, their fundamentals will not be as strong as they were before COVID. So then we do expect a correction. I think the same thing as well is expected in the real estate sector, especially on commercial, maybe for the real estate sector delayed. Even since some fund managers come out and say, we can't pay you your money if you need it now. We don't have liquidity because people are not buying houses. I mean, I don't need to name names, but if you're out there and keeping tabs on what's happening, that's a space that's happening. What that tells me is in a couple of months, not today, but in a couple of months, if you have cash and you're in a solid space, there will be very many opportunities for you to invest in. Whether it's in real estate, whether it's in listed entities, or whether it's buying people's businesses and continuing with that, or even starting your own business. And actually, for us, we're in such a better place structurally. Allow me to just deviate for a second. When you look at past pandemics, the last one, which happened in the agrarian age, people were farmers, So if the one thing happened, you just didn't have another option. But for us, we are in the fourth industrial revolution age, the age of the digital world. We're in a space where before, for Abojani to do this, they'd have had to incur the cost of a room, whether it's their own room or the cost of hiring a space to facilitate this, that have had to cater for refreshments for you to convince you to come into that space, over and above their WhatsApp. So they would have had a digital platform, but the previous business mindset was, you need to have an office. I look for work with banks, and at times they refuse to give you work because they say, we need you to have been in operation in one physical space for 3 years. Like, but I've been working. And then they have to come and inspect your office, and somebody walks around with a book, for you to be able to get into that space. But when I say this thing has actually come in a different space where we can use digital, we have access to digital. It becomes so much cheaper for you to start a business if you ever wanted to start a business. People are more open to hearing you out. So it's easier for you to actually test the market and research and see what can I be able to invest in today than even a month ago. At least for me, that's the thing that I am finding. So I'm coming almost to the tail end of my presentation. I have covered your inflows and your outflows and your key considerations if you are building an investment fund. Your emergency funds, 3 to 6 months, try and start at it from today. If you're looking for investment opportunities, keep your cash first. Let this uncertainty end. Because for us, it could be up to, it could be 18 months, it could be more. Because remember that Kenya is getting into an election cycle in 2022. And what happens is in 2021, businesses just sort of start flatlining. So now you have COVID, you had a weak economy, then you have an upcoming election. So it could be more a long-dated cycle of recovery. But in all of this, this is the one thing that I'd like you to take out, if nothing else. Mind your own business. You go sit down with your finances, either in your household or at an individual level. Look at them and ask, what can I do? What can I do to defend my top line, my revenue? What else can I be able to sell? Even though I'm starting from selling it at 1 shilling, what can I do? What can I scrap out in my expenditure? Because we spend so much time trying to listen to what CS Mutai Kagwe is saying, and then we evaluate then what the president is saying. But how about we just challenge ourselves to spend that time looking at our own business and say, am I in a good space? Am I in a bad space? What are the 1 or 2 or 3 steps that I can actually take in this week? So for me, I'd leave you with, look at your finances, pay special attention to it, be as honest as possible as you can be, and especially when you're looking at your revenues, and then ask yourself, what are the steps that I can take? And I tell you, the moment you write your numbers down, your mind starts to just process and look for solutions. But if you keep acting like, there's a magic wand out there that's going to sort of call us to a point of reset, then you miss opportunity. So I think this crisis is an opportunity for us to just mind our own financial business, look at our finances, see what we can do. And if for you are in a good place, if you have been looking at your personal net worth, if you already have a number that you're working towards, and if you have extra cash to be able to deploy, I'd say hold out, because there will be opportunities that will come through. And I think one of the biggest and the safest opportunities that will come is through the government of Kenya borrowing. They will have to borrow a lot of money just to finance their basic needs. I doubt if they will go the infrastructure bond way. Initially, we had started seeing a lot of infrastructure bonds. And this was from guidance from Central Bank and IMF saying that the government needed to extend the date of its paper. But if the government can't raise taxes from the infrastructure bond, and if I play devil's advocate, then it's better to be able to issue papers that I can at least remain with something if I issue them out. So there'll be a lot of interest for that. If you're holding on to cash and you don't know what to do with it, I would say invest in the 3 months, the T-bills that run for 91 days, so that you can be able to get a sense of what next when that paper matures, or you can put it in a fixed deposit account as you're waiting to see how the economy goes. But I think in terms of the risk and return trajectory of assets in Kenya, I'd start off with the government bonds or the T-bills, and then now be opportunistic in terms of either real estate or stocks. I think there are also opportunities and different people who sell and give access to assets in other classes. That's a different conversation that I'm willing to have either through Abojani or on a one-on-one. And I think as I come to the closing of my presentation, as you mind your own business, I would be open to maybe spend time on a free consult, a 10-minute or a 20-minute for anybody who's interested to see what else can they be able to do. I'm happy to share a calendar through the team at Abojani, and you can pick a date. And what we would be looking at is to see where you are. Do you want us to work together to look at your finances and extrapolate and see how far along can you be able to go? Or conversely, also speak to your consultants at Abojani to see what else can be able to be done, just to make sure that you're in a better space.